Ladies and gentlemen, good day and welcome to Balrampur Chini Mills Limited earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jenny Rose from CDR India. Thank you, and over to you.
Good afternoon, everyone, and thank you for joining us on Balrampur Chini Mills Q4 and FY23 results conference call. We have with us today Mr. Vivek Saraogi, Chairman and Managing Director, Ms. Avantika Saraogi, Business Lead, and Mr. Pramod Patwari, Chief Financial Officer of the company. We will initiate the call with opening remarks from the management, following which we will have the forum open for a question and answer session. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Saraogi to make his opening remarks. Over to you, Mr. Saraogi.
Yeah, thank you and good afternoon, everyone, and thank you for joining us on the Q4FY23 call of our earnings. I trust all of you had the opportunity to go through the results presentation, providing details of our operations and financial performance. I will initiate the call with an update on the current developments in the sugar sector, followed by our company's key highlights for the period under review. ISMA has lowered its projections for overall production during the 22-23 season from 34 million to 32.8 million. This factors in about a 4 million diversion from sugar to ethanol. The crushing season in Maharashtra concluded with a production about 10.5. This was against 12.1 which was projected earlier, primarily due to lower yields. In contrast, UP production could be 106, 10.5 to 10.6. Karnataka is estimated at 5.7 as compared to 6.2. So, in a nutshell, UP has gone up about 5%, 10.2, about 3 to 4% UP has gone up, and the rest have come down. Furthermore, sugar mills have almost completed the export quota of 6 million, and I believe it's been shipped out from not only the mills but also majorly out of the ports. How much could have left the ports?
Maybe 5.9.
From the port, yeah. So it's basically evacuated, and given the drop in production, the government is focused on ensuring adequate domestic supply. Obviously, based on the production, consumption, and export numbers, we will have a closing stock about 6 million tons, and hence there is no probability of any further export. This also means that there is a very fine balance of demand and supply, which is positive for the pricing. It should keep pricing in firm stead. On the ethanol front, India is making progress in blending ethanol with petrol, and towards the target of achieving 20% blending. Ethanol supply to OMCs has risen to 434 crores in 2021. To meet the 20% target, the government is promoting production of ethanol from maize crops as well, but that seems to be a little far off. The target is to reach 12% blending in 22-23, which is the current season, 15% in 23-24, and going up to 20% thereafter. This would require a capacity, or 20% would require a capacity of 1,700 crore liters. The auto industry is adapting with flex fuel vehicles, and 20 ethanol pumps have been launched in more than 100 outlets. Also, the auto companies have started from 1st April, all the vehicles should be able to take E20. So they've also sort of been able to re-engineer or enable the engines to adopt E20 from 1st April. Ethanol production has also benefited the sugar industry and the farmers. On the business front, company concluded the year on a positive note on account of steady contribution from sugar and distillery segment. Despite a moderate performance in the 9 preceding months due to lower crushing volume in the previous years, the company witnessed an improvement in Q4/23, primarily owing to enhanced ethanol capacity utilization across segments. During the quarter, cane crushing was higher due to increased cane area and improved yield at the farm level. So if I can brief, we have crushed 10.3 crore quintals of cane against 8.88, and that is an increase of about 15% over last year. Our recovery approximately is almost final. Last year was 11.47 on a blended level of CAV. And this year we would be about 11.62 only. So that is an improvement of about 15 bits with an increase in percentage of 15%. So both have gone up. And this, as you are aware, the last 2 years were ruined because of excess rain in very short periods of time. Coming to distillery business, capacities are now being optimally used. We are confident in our ability to reach the target of 34 to 35 crore liters of alcohol production. Additionally, the company is embarked on a project to increase cane crushing at its Kundi unit from 8,000 to 10,000 TCD, which will be financed through internal accruals and which would be commissioned prior to cane crushing in the next year. The company has allocated more than 1,100 crores towards capex in FY23, out of which 466 crores has been raised through debt financing, while remaining funds have been sourced through internal accruals. These strategic investments will enable us to drive growth in future. In conclusion, the company is dedicated to generating value for all the stakeholders through prudent investment and capital allocation strategies. Keeping this in mind, an interim dividend of 2.5 rupees per share was paid during the year. Additionally, we commenced our 6th consecutive buyback of equity shares on 16th November, and we have bought back a total of 22.9 lakh shares. The buyback is open till 15th May, but it's beyond the permitted price. This brings me to the end of my discussion. I would request Avantika to provide you an update on the progress on the cane front. Yes, Avantika.
Good afternoon, and thank you everyone for joining the call. I'd like to give you a short overview of the cane activities. Our cane plantation is almost complete for the year. The total area under cane has again increased by an additional 7 to 9% for the upcoming year. This shows a further hike in cane availability in the season to come. Area of disease-ridden and degenerating CO0238 is reducing drastically every year. We stood at around 75% crush just 2 years ago, and in the year gone by, we have already come down to 46% crush, and by the next year, we will drop to only a 27% crush.
Of 238.
Of 0238, yeah, not of total. This will not only improve the recovery to the tune of its reduction, but also the incidence of disease will reduce due to the sparseness of it, and it will also make it easier to identify and salvage the disease plot thereafter. The area of 0238 which has been reduced has been taken over by higher recovery varieties like CO0118, which we had only around 4-5% of 2 years ago, and this year we have crushed approximately 20% of it, and it will increase by a further 13% for the upcoming year, putting us at a total of 33% for the upcoming year. This variety has proven its superior recovery and good yields in the factories, which have crushed a higher percentage of it this year. Other than this, new and higher recovery varieties which we crushed a negligible amount of this year have also increased to the tune of 8% crush for next year. Therefore, in a nutshell, we are again set up for an even higher crush and an even higher recovery in the upcoming season. Other than this, we have faced a lot of climatic disruption, and we have worked very, very hard on mitigating any sort of climate risk, be it high temperatures, drought, flood, heavy winds, etc. We have worked and will continue to work on climate smart agriculture to shield ourselves from any drastic changes which can occur for cane quantity and quality year on year. Another sphere which has really picked up is ratoon management. Credit to our cane staff, but now our farmers have really adopted this idea of working on ratoon crops, which was never a practice in East UP. This will also help total crush and recovery. We have also done cane payments at a consistent 8 to 10 days post-supply basis, which is even before it becomes due at a 14-day according to the government norm. This has created immense goodwill at the farmer level, and it helps us motivate them to plant good varieties and do all necessary agri practices in order to keep the crops lush and healthy. Lastly, programs like tissue culture and seed nursery are on and going well. This will ensure long-term healthy cane supply. That's it for the cane front. Thanks a lot.
Should we start?
Yeah.
Sorry, sir. Please go ahead.
So basically that was a rundown on the cane front, and now I request Pramod for some remarks, and then we can go with you.
Thank you and good afternoon, everyone. I hope all of you had the opportunity to go through the presentation that has been shared, wherein all the financial and quantitative data have been given. To ensure that we have a larger portion of time for Q&A session, I would request the moderator to open the forum. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Rajesh Mazumdar from PNK Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on a good number. I had a question on the ethanol supply program of the government. If we look at it, that we are talking about 600 crore liters this ethanol year 22-23, of which you said about 518 crore tenders have already been finalized. Now, why is the offtake so poor? Till 23rd April, only 220 crore liters has been delivered. I wanted the answer to that. And secondly, even if you look at our own ethanol sales for the quarter, it is about 2 crore short of the production, which has never happened before. So, is there any worry on that our ethanol sales, though we are targeting 34-35 crores, may actually be far shorter because of the lower crop this year? That was my first question.
Pramod.
So oil marketing companies came out with 600 crores of ethanol requirement for the 22-23 ethanol year. Subsequently, there was a revision in the cycle. They reduced the period from 12 months to 11 months. So on that basis, on 12% blending, the consumption requirement would be around 500 crores liter.
For 11 months.
For 11 months. And they are trying to build up a storage for around 50 to 60 crores liter. So against 550 to 560, I believe 518 has already been contracted. This is the position as of now. Now, as far as Balrampur Chini Mills is concerned, so there was some delay in start as well as stabilization of distilleries. So that as a result of which the production was on the lower side. But if you see the inventory number of ethanol, alcohol, as of 31st March, we are holding 2.27 crores liter against last year's number of around 60 lakh liters. So some dispatches had happened in the last week of March, and as you must be knowing that the ethanol revenues are accounted for only on delivered cost basis. So there was in transit, ethanol was in transit around 50 to 50 lakh liters.
So you are saying effective stock is 1.5 crores.
In addition to that, there was movement also.
So just to add to what Pramod said, so oil marketing companies need a steady stream of supply for the year. So some stocking will happen at our end, marginally higher than last year, so that in the weak months of July, August, September, when most people don't produce, we will produce. There will be adequate availability of ethanol then in the last quarter where people usually fail.
Okay, sir. And out of this 513 crores, it's possible to know our market share in the tender?
Our
You don't need to.
Our tendered quantity in that 513 crores, yeah.
So our tender quantity is 26.74 crores liter.
Okay, sir. And this we hope to complete by ethanol year 22-23.
Correct.
Yeah, before November.
Before.
Okay. Thank you. I'll join back in the queue.
Thank you. We have our next question from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Thanks for the opportunity, sir. So I had a couple of questions. First, on margin front. So Vivek sir has always been guiding that our margins on juice routes are similar to what we have in B-heavy molasses. But somehow this quarter around there has been a sharp margin. And I believe that this prime.
Mr. Kanani, I'm sorry, you're sounding muffled.
Yeah, he's breaking. Yeah.
This is better?
Yeah.
So my question was with respect to margins on the distillery front. Sir, you have been guiding juice route has similar margins as.
I'm sorry, sir, we are not able to hear you.
No, you're not audible.
I'll just come back to you then. I'll just one back. This is better reception.
Even the mobile.
Thank you. We have our next question from the line of Pratik Tholia from Systematics. Please go ahead.
Yeah, sir. Hi, and thanks for the opportunity. So just a quick clarification. In fourth quarter, we sold 4.33 crore liters of ethanol from syrup and grain route. Can you split this between how much is syrup and how much is grain, or it was 100% syrup?
100% syrup.
100% syrup. Okay, thanks. And sir, have we exported any sugar in fourth quarter, or we have sold our entire, the quota to Maharashtra?
So
No, I think he's talking about export quota.
Yeah, sugar export.
Yeah, out of 1.98 lakh tons of quota allocated to us, 1.4 lakh ton was met through physical exports, and the balance was swapped against the release, domestic release.
Right. So there's no sale of physical sale in fourth quarter, right? Physical export in fourth quarter for us.
There is physical sale of export in the fourth quarter. So within 31st of March, we have completed the entire 1.4 lakh tons.
Okay. Understood. And the quantity that you've got against the swapping of quota, that has not yet been allocated to it. That will come from May onwards.
No, that has already been allocated. It started from November itself. So it will run from November to, maybe I don't recall the exact month, maybe May, June, July.
Okay, because your sale actually if I see YOY, your domestic quota has been largely flat.
Yeah, you are right. Particularly in the month of March, the demand as well as the prices were subdued.
Sorry, I missed the last part. Demand was?
Subdued.
Okay. And sir, just lastly, a broader question, because we are expanding our crushing capacity also from 8,000 TCD to 10,000 TCD at one of the plants. And there are other industry players also who seem to be expanding capacity. But just maybe 3-year horizon, how do you see the availability of raw material? Of course, Madam just pointed out that you are doing a lot of work in terms of increasing the yields and all. But with overall industry also expanding, and then there are also this weather-related challenges we've always been facing, whether it is weak monsoon or excess monsoon or red rot, etc. Do you think the raw material availability with this expanded capacity, not just for us, for the industry as a whole, will it be steady state supply, or there could be challenges going forward in terms of availability of cane, maybe 3-4 years down the line?
We don't see a challenge in cane availability. To the tune of the capacity that we create, we will always, in my mind, receive cane without an issue.
So let me bifurcate your concerns into 3 parts. One, you're talking of others expanding. So cane availability in our geographic area is privy to the expansion done in our area. So nobody in our area is expanding. First. Two, you spoke of El Nino. So in East UP especially, and I'm just sticking my neck a bit on this one, but don't hold me to it. Little lower rainfall is beneficial for us. And if the later part of the year doesn't have rainfall, we'll be delighted. If September onwards we don't get rain. So El Nino doesn't concern us so much. Expansion I've answered. Our crushing capacity increase, which you just pointed out, and as Avantika has said, we'll have enough cane. So to hazard our guess for the next year, we hope to be 10% higher in terms of cane crushing. The recovery can't be predicted, but we are looking to be definitely higher on recovery also, based on Avantika's presentation of varietal change and disease management.
Got it. That's very helpful. That's it from my side. Thank you and wish you all the very best, sir.
Thank you.
Thank you. We have our next question from the line of Sanjay Manian from ICICI Direct. Please go ahead.
Hi, sir. I have few questions. One is, what I understand, your domestic quota was somewhere around 8.26 lakh tons for the full year, whereas your total sales is 9.03, which includes 1.4 lakh tons of exports. So have you foregone some domestic quota in the financial year or maybe in this quarter?
Yes. As I was mentioning earlier, the prices were subdued. Domestic prices were subdued in the March quarter, so there was lower sale.
So this would be to the tune of 50,000-60,000 tons, or?
The exact data we don't have, but Pramod has given you the answer that at absolutely depressed prices, we decided to forego a bit of sale, which will come back later.
Okay. Understood, sir. And if you can just repeat what is the CO0238 percentage in the crushing this year and expected next year. I missed that data.
It's 46% was crushed in the year gone by, and we expect only 27% in the next year.
And Avantika, the 27% which we are looking to crush will be much better and healthier.
Because the disease will spread less due to the sparseness of the field.
Okay. So next year 27 would be 00238 and 33% would be 118. So which would be the other varieties which you are using?
So we are looking at some very high yielding varieties like 15023 and 14. There are some varieties which are sort of only meant for lowland. So it's a combination of that.
Okay.
Around 8% of higher recovery varieties in totality, you can say.
Super higher recovery varieties.
Yeah, I'm not wanting to bifurcate among
the rest. Okay, cool.
Sure. Okay, thank you very much.
Thank you. We have our next question from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, good afternoon, sir. Thanks for giving me the opportunity. So my question is regarding the sugar, production for the next year. Then, considering the higher yield varieties and good recovery rates, what kind of expectations are in terms of production for upcoming season and season after that?
So are you talking for Balrampur or for the country?
For Balrampur. Yeah.
So as we indicated to you, next year we are definitely looking at 10% higher, weather not playing super truant, and maybe another 7 to 8% higher thereafter. So our capacity, just to give everyone a flavor of our business protocol division between, B-heavy, juice, sugar crushing, our assets on the ground today are sufficient and would need about 12 crores for 100% sweating. And we hope to get that. Let's say you done 10-30 this year, you're looking at 10% more. So 11-30-40 next year, and thereafter easily 12.
Okay. Thanks. And so my second question is on the working capital. So this year, obviously because of the higher inventory, the working capital requirement was on a higher side. But in one of your slides in the presentation, as the distillery contribution goes up, the working capital requirement will also moderate. So in that context, should we expect the working capital days to come down over the next 2 to 3 years?
Yeah, you are absolutely right. The reason behind working capital utilization went up this time because of the deployment of internal accruals into the capex. Had there been no capex, you could have seen the working capital utilization lower by 500 crores at least. As we move up, there will be lower working capital utilization.
Right. Thanks. And sir, one last one on the international, front. So in April, the Brazil production has got by around 42 odd%. This is what I've read in the media. So should we expect, the international supply to go up, considering the fact that the dilution towards the ethanol is a little bit on a lower side because of the drop in the crude prices. So in that context, should we expect supply to be a little bit higher on the international front, and will it have any impact on sugar prices or sugar realization for us?
So my request would be, don't go by this every fortnight release of data. Brazil's production already expected is around 37 to 38 million ton for the upcoming sugar season. That has already been factored in the prevailing international prices as well as the overall demand, supply or sugar availability at the global level.
Basically, you need to see Indian prices. The more relevant data is India's inventory, India's upcoming production, with an understanding that export, as and when permitted, should sell at a healthy price. All three of these boxes are ticking and ringing very loudly today. So, as Pramod said, we don't need to look at any other data in case you're looking to track Indian sugar prices.
Thanks. Got your point, sir. Thank you. Thanks for the understanding and all the best for your future.
Thank you. We have a next question from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Yes, Shailesh.
Yes, sir. Thanks for the opportunity. So my question was with respect to margins from juice route vis-a-vis B-heavy molasses. We have been guiding that the margins would be on the similar trend between juice route and B-heavy, and somehow this quarter the margins have taken a fall because of juice route sales basically. So can we share some views on that and also guidance going ahead for the distillery division?
We would not like to share the segment-wise guidance as far as the profitability is concerned, but the profitability or the margin out of juice is definitely lower than the B-heavy. This is what we have seen in whatever period we have distilled.
But as we go ahead, this margin will improve a bit because your first year with B-heavy, we tried various chemicals combinations. Towards the end, we got the result, and we hope the margins ratio will definitely improve.
Okay, but the fall in margins seems to be very steep. That is the reason I was wondering, that juice margins are very less, or if you...
No, they are not so less.
See, these capacities are yet to be
fully
utilized. So that is also one of the reasons. Some fixed overhead.
Plant stabilization.
There were some issues with respect to stabilization also.
It takes some time for a brand new thing. So your concern, or don't worry, utna mat soche, utna margin kharab nahi aayega.
Okay.
You will see next year that they will be like touching each other, close to each other.
Okay. So my related question because of that was that, correct me if I'm wrong. So we are not in a catch-22 situation wherein we are facing margin pressure under juice route vis-a-vis B-heavy, and if we don't take juice route, our volumes would not give a healthy jump as we are expecting. So that is not the situation, right?
No, that's not the situation.
Okay. So this quarter can be taken as an...
Having said that, Shailesh, that, at the current juice-based ethanol prices, margin is lower than DAP.
But you've got to understand that all three things need to be done in order for the country to holistically move forward. And we definitely will improve from this year, but as Pramod says, you cannot expect the same margin maybe. So I'm just giving you another scenario. In 4 years from now, let's say sugar production becomes excess and the global markets take a downfall. You will find that these two divisions are giving you the best return. So you are hedging yourself into all three based on a government program which needs the industry participation in order to fructify. Yes, as Pramod said, it will be lower, but it will definitely make up from here. Pramod, the gap will narrow, as we've seen in the last 1 month of working.
So, sir, sorry to stress on this, but can we give a guidance on consolidated basis in that case if we are not comfortable with the segmental basis, but consolidation?
We don't give guidance on the margin or profitability.
Okay, fair enough. Sir, I missed one part of the call. Can you share the sugar volume and realization breakup in between domestic and export for the quarter?
I think that has already been shared in the presentation.
Okay, I'll just go through it then. So one more question. We have seen a timing difference in ethanol offtake for the fourth quarter. So in light of that, do we revise our 34-35 crores of guidance for ethanol volume for the next year? If that
as of now, we look to supply 34 to 35 crores for FY24. But as the season progresses, we will update you.
But there is no big sort of gap one is looking at.
Okay. Sir, if I can squeeze in one last question. Sir, I'm seeing some stock of syrup as well mentioned in the presentation. And I was under the impression that syrup per se can't be stored. So if you can just share some light on that.
It's a work in progress.
It's rotation. So distillery, when you begin, you get feed in 5 days. So it's that which is rotating within the machines.
Okay, sir. Thanks a lot, sir. I'll come back in queue.
And one more thing. This year we began a little late because some of our expansions sort of got completed 15 days late owing to supply. And there was a lot of water in 2-3 factories. So next year, hopefully with this El Nino prediction, we should be able to begin an average of 10 days earlier for the whole company. So that itself will increase your ethanol supply.
Fair enough. Best of luck, sir.
Thank you.
Relax. Good night.
Thank you. We have our next question from the line of Nishant Sharma from Nuvama Wealth Research. Please go ahead.
Thank you for the opportunity, sir. So my question is again related to margin. Just wanted to understand, while distillery segment is the highest grossing margin, this time around we have seen one-off kind of events which impacted the margins. But in terms of sugar sales in domestic and in international markets, where we would generally get better margins, or maybe if you can help us understand where international prices needs to be certain percentage higher to be equal in domestic, getting margins same in domestic as well as international market.
See, you need to evaluate the performance of the company, of a sugar company, on a company level basis, number one, and on an annual basis. March quarter will always be the best quarter because of the fact that we get complete 92 days of production, and fixed overheads get allocated or spread over a larger volume of production. This segment-wise profitability is a function of transfer pricing.
Exactly.
if I want to assign a lower value
Yeah.
to bagasse and molasses, my
You
profitability will jump up in a distillery division.
Understood, sir. For distillery and sugar segment, I got it. I was asking for a spread between international market, if we sell sugar in international market and if we sell sugar in domestic market. So what is the, price differential that would be needed for having a similar margin? So that is where I just wanted to understand the sense.
So this is irrelevant at this point in time. We are selling sugar at around 36.5 rupees per kg in the domestic market, as against the international prices of say around 51 rupees per kg. But nobody in the country has any quota to export sugar, and that is the reason that these prices are ruling so high in the international market.
Okay, I'll just switch to the other question. So my next question is that we have mentioned some levy of duty in the distillery segment on molasses. What is that levy of about 7 crore, close to 7 crore? Is it one-off or it's a regular one?
No, it's a regular one.
The government of UP keeps imposing new fees which one has no control over. We also want to court against this, but with no success yet.
Okay, but does such things happens every year, or this is more like changes in the rates happens every year?
No, not every year, but this.
It was introduced last year.
This was.
This is as a percentage of something we can build in our going forward. We can build in, because possibly this might have also impacted our margins.
I know it has impacted, but we agitated very hard. We don't hope that such nonsense should repeat itself. But withdrawal of this looks difficult.
Okay, if last question I can squeeze in. On the distillery side, is there any cyclicity for using, whether we use B-heavy molasses or sugar syrup or grain-based, like in quarter one or quarter two, quarterly seasonality is there, sir?
Sorry, didn't get your question.
So basically, in terms of manufacturing or producing ethanol, we use different raw material or the input side. So we use B-heavy molasses, we use sugar syrup, and now we have a capacity for grain-based as well. So we will be seeing any cyclicity while using this input, or this can be done any given point of time? I mean, it could be interchangeable any quarter.
So there is only one distillery which is compatible for making grain. That's the Mirzapur one. In season, it will run on syrup full. Off season, it will run on grain. The rest, we have some, the rest are all B-heavy ones. One is C-heavy for country liquor. But yes, they are interchangeable in terms of B can run on C. Juice can run on B. But nobody can run on grain outside of Mirzapur.
Okay, sir. I have a few more questions. I'll call back into it. Thank you.
Thank you. We have our next question from the line of Rajesh Mazumdar from B&K Securities. Please go ahead.
Yes, sir. Thanks for the opportunity again. So I had a question on the capex in the sugar mills. What is the kind of output increase we envisage, or do we envisage at all, from the modernization that we have done at the sugar mills level? I'm just talking about the sugar capex, not the distillery capex.
So what we are going to get is higher cane availability and lesser losses. And, old plant safety breakdowns, etc. So if you just to explain to you, East and West are two different zones. West UP farmers have no problem if you run up to middle of May, they don't reduce cane. If you do that in East UP, they will reduce cane. So we've got into a higher capacity. Now, this will enable us to crush what we need to go to 12 crores by April end. So that will keep the recovery good, losses less, durability of supply on a longer basis.
So it will have an impact on the recovery, whatever little bit it has. Is it?
Yes, definitely. Positive recovery impact by not getting into the May month and lower losses.
I was just wondering basically because the capex is pretty significant. So what kind of a return we want to see on that kind of investment we made in this company on the sugar side at least?
Yeah, let me explain to you the rationale behind these big investments. So these were old plants, and they needed to, the milling tandems, etc., needed to be changed for durability and for higher efficiency and safety. With that, we added juice into Balrampur. So it's a well thought out measure. Obviously, such investments don't yield return in 1 year. But I am very certain over the next 2 to 3 years, we should have our investment in the bag. 3 years from now.
3 years for the sugar?
Beyond now. So total 4 years.
Okay, that's helpful. And so one question I had, if we see, we have seen an impact on the sugar crop this year due to Maharashtra. If we see a continued impact this year, El Nino or whatever, if it happens, is there a chance of the ethanol program getting derailed a little bit in the sense of the government procurement reducing, in which case we'll not be able to meet our targets?
I didn't get your question.
So the question is, we had already seen a sugar production fall this year. If we see in sugar year 23-24 also some kind of El Nino impact on the crop from wherever, will we see a derailment of the blending program on the government reducing its?
Let's get the sequence very clear.
Okay.
If you produce below 280, you have a problem. Okay? Then when your ethanol diversion and your production is net of the diversion, no? So this year, even a bad year, you produced almost 330 lakh quintals. Your gross was 370. So if next year your gross is even 300, they are encouraging ethanol. Your exports will not be allowed to that extent. Domestic production, net of exports, domestic production, net of ethanol should be equal to what is required for consumption. The program never gets derailed. And I don't think that's even in the horizon anywhere.
So the government will use export tool more as a kind of balancing factor, is what you're saying.
So can I explain to you, if you hear me properly, please? Production is net of ethanol, no? What this figure you've seen, 330 lakh tons, is net of ethanol, no?
Correct.
Right? So obviously the production is recorded net of ethanol. So net of ethanol production has to be above 28.
Yes.
20 lakh tons. Correct?
Yes.
So that is your sugar availability to feed the country. If that is over and above 280 and your closing stock is 6 million, export will be allowed.
Okay. Got it. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you very much. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarification or would like to know more about us, please feel free to contact us. I once again thank you for taking the time to join us on this call. Thank you.
On behalf of Balrampur Chini Mills, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.